Is the stock market about to explode? We're currently sitting at all-time employment highs while we still have a federal stimulus package that hasn't been signed off on. Meanwhile, the stock market is only about 9% away from all-time highs. So what's going on here? And is the stock market about to explode upwards or downwards? We're going to get into that in this video. Hi everybody, welcome to Mediocre Money. This is my YouTube channel all about personal finances. And I'm Mark, your host. The USA just reported their unemployment at 34 million. That is all-time highs for the United States. Canada also has millions unemployed with an unemployment rate of 13%, the second highest it's ever been. And all of this has happened in just 2 months. On top of that, Wall Street experts and analysts have constantly been underestimating how badly all of these numbers and the situation is going to be. When Goldman Sachs estimated 2 million unemployment claims, there were almost 4 million. And then when they estimated 5 million unemployment claims, there was 7 million. Every professional estimate has been bad, but reality has been even worse. To compare that, during the 2008 financial recession, US unemployment topped out at about 800,000 unemployment claims. That's an increase of over 4,000% compared to the 2008 recession. On top of this, the USA just reported their GDP for Q1, which is their gross domestic product. It was expected to shrink by about 4%, and the numbers ended up being about minus 4.8% in growth of their GDP. That's almost a full point lower than what was expected. Now, for those who don't know much about macroeconomics or investing, missing expectations by almost a full basis point is a huge miss. Plus, hundreds of companies have been laying off employees by the thousands. Airline and cruises are down 80% in revenue. The travel, entertainment, and tourism industry has been decimated, and oil and gas is barely surviving. All of this combined means that there is a lot less money in the system and in our economy than there was previously. And professional investors are starting to weigh in on our current market conditions. Warren Buffett has sold his airline and bank stocks and has said that he believes the market is overvalued right now. Those feelings have been echoed by other professional investors and even high-profile celebrities like Elon Musk. Even Goldman Sachs, one of Wall Street's most successful investment firms, came out and said that they expect the S&P 500 to decline by 20%. So how did the stock market react to all of this? Well, it reacted the way anyone with common sense would think. It's gained over 30% in the past month and is about 9% away from all-time record highs.
Wait, what?
Now, it's okay to be confused. Every day I wake up seeing horrible news about all the economy and the companies laying off people, while I see the stock market rise and always in the green. Investors love to say how the markets are efficient and how the price and cost is already baked in, which got me thinking, how are things that are worse than what we expected somehow baked in? And do Wall Street paychecks come with fortune-telling abilities? Because I'd like to get me one of those. Both the paycheck and the fortune-telling abilities. Now, while none of this really makes sense, I'm here to shed some light on why these things are happening. And believe it or not, what the stock market does is not very often related to reality. So let's start off by going over why the stock markets are up. Now, governments have been printing trillions of dollars, with the US printing almost $3 trillion. And that does help keep the economy afloat. Mind you, that hasn't been actually signed off on and implemented yet, but it is going to happen. And there are some companies that have actually reported better results and better earnings and growth, like Teladoc and Zoom. And what we also have to realize is that in times of great uncertainty, people like to look for a shining light. And when there's a lot of people that are invested in the market and have an investment, they want to see the light. They want to see the upside. And we also have to realize that the stock market in general is controlled by a relatively small group of very wealthy and very powerful individuals who have lots of investments in the stock market. And just like you and I, whether we like it or not, we both want it to go up. both you and I and the people who have millions or billions of dollars invested in it. We want to see our money grow, whether it should or not. So now let's go over why the stock market should go down. Although many companies have reported good earnings, a lot of them have not, and a lot of them have been struggling, including many industries that are affected through chain reactions of major industries like airlines and cruises going down. Zach Cooper, an economist at Yale, has reported that the USA is losing about $500 billion monthly from this COVID-19 crash. Plus, consumer spending is way down and very different. And all these people that are unemployed do not have the excess money to spend on other luxuries that they would have before. That high unemployment means that there's less money in the system overall. Estimates for Q2 GDP are decreases in the double digits, so potentially decreasing by 10% or more. So because of that, we're looking at quite a long-term slowdown for our economies. Plus, on top of that, Warren Buffett, Goldman Sachs, and Elon Musk all think that the markets are overvalued and should decline. So what do I think the markets are going to do? Ultimately, my opinion, your opinion, even Warren Buffett's opinion doesn't really matter. Because ultimately, none of us really know if the markets are going to go up, down, sideways, or in circles. I can't predict the future, and no one can.
Number one rule of Wall Street. Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways.
So what does that mean for you and me? How can you and I thrive with our investments through this time of uncertainty? Well, it's important to have sound investment principles that you can live through in downturns and in upturns. I've added a link in the description below for an example of my investment principles that I follow. It includes things like don't worry about timing the market because time in the market is more important than timing the market. Buy consistently, never sell. Own diversified low-cost funds. And to stick to your investing principles, whether you are in a bear market or a bull market. But there is one more thing we need to think about here, because the US is printing almost $3 trillion. Well, they're not actually printing it. They are just adding numbers to a screen. And countries all around the world are doing similar things. A lot of people get confused by this because isn't this going to have unintended consequences? Well, the answer is yes, it might have unintended consequences. If we compare the federal stimulus package from the US from right now, which is almost at $3 trillion, potentially with them adding more trillions of dollars to the 2008 recession, well, in 2008, the bailout package was at $800 billion. So this year's 2020 bailout package is almost 4 times bigger than what happened in 2008. And how can this continue to go on? Like, what is the result of this? Is it possible that we can just keep creating money from the government as much as we want into infinite future? Well, subscribe to my YouTube channel to find out in the next video, and hit the little bell icon too so you get notified, and I'll be showing you guys what the unintended consequences of this excess printing of money might be. I hope you guys really enjoyed this video. My name is Mark. This is Mediocre Money. I would really enjoy if you guys wanted to comment on whether or not I should keep my beard. I've been growing it out since quarantine, and I don't know if I should shave it or if I should keep it. So let me know in the comments below, and you know what? Maybe I'll do a shaving video if we need to. That's it for this video. I look forward to talking to you guys in the next video, which is going to be going into these unintended consequences of infinite money printing. Peace out.